Our first presenter this morning is Diane Howe. Diane is the risk map lead for FEMA in Region 6. Prior to this role, she worked with FEMA as the risk analysis, communications, and outreach coordinator for 10 years with a focus on mapping communication product development to support all 5 of our Region 6 states. She is a CFM with a background of 40 years in public and stakeholder communications outreach. Joining Diane this morning is Bruce Bender. Bruce has been providing community engagement, outreach services, and flood insurance expertise since 2002. Bruce has been supporting FEMA's NFIP national marketing programs, national mapping programs, and assisting counties and communities with their community engagement and outreach efforts. Bruce has participated in numerous flood insurance related cases related to flood and private flood insurance. Previously, Bruce worked in the insurance industry for approximately 15 years, including managing one of FEMA's largest WYO flood insurance programs and an insurance agency. Questions can be posted in the chat box. At this time, all participants will be muted to ensure the quality of the presentation. Please check out the remaining topics on our website at www.larealtors.org. We thank you for joining us today. You can begin, Diane.
Thank you very much for having us. Well, I'd like to start by just talking about today's agenda. We're going to cover the Louisiana mapping projects that are ongoing, those effects of map changes on flood insurance, and some recent changes to the National Flood Insurance Program. We'll also cover private flood insurance and some risk communication resources and tools. So in talking about the Louisiana mapping projects, we can't stop without talking about Risk Map. So in 2009, FEMA's Risk Map program has been providing high quality flood maps and information tools to better assess the flood risk from flooding, supporting planning and outreach to communities to help them better take action to reduce or to mitigate their flood risk. And each of those Risk Map projects is tailored to the community to help them to take action to reduce risk or to mitigate that flood risk. Each of those risk map projects is tailored to meet the needs of the community and to may involve different products and services. So our goal at FEMA is to bring high quality data to the communities that will increase their public awareness of their flood hazards they face daily and to help them make better informed decisions of the communities they face to help reduce their risk to life and property. So as you can see, these are the states that are covered in our region. So Region 6 has 5 states. Currently, last check I had about 204 ongoing risk map projects in all of the region, but in Louisiana, there are about 49 ongoing projects. So in the mapping timeline, it's not a very complicated looking timeline, but it actually has a lot going on in it. So I'm talking about the blue bars that go down. So some of our maps start off with that preliminary issuance. And when we talk about that, they issue the preliminary flood insurance rate map and the flood insurance study. The next thing that they have is a public meeting with the local officials called the Consultation Coordination Officer meeting. That's a long mouthful. But then there's a 90-day appeal and comment period that goes on that starts sometime after that. And there's a little yellow star there. And that indicates a time in which communities or the public can, if they disagree with the maps, they could present some information back to FEMA through a process that we have to see if they could do a change to the map. So that is one of the times they can do it. The other time, you see the other yellow asterisk at the end of it is after those maps go effective, that they can actually take a letter of map change. They can do like a LOMA to also change the map if they disagree with the maps. So those 2 times they could do that are during the 90-day appeal and comment period or after the map has gone effective. So after the appeal and comment period, there's a letter of final determination after we've resolved all the appeals. And then the community has about 6 months in which to update their flood ordinance and then also to adopt those maps become effective. At the bottom of the page, we also have created a kind of like a virtual open house. And that link is on the new FEMA.gov site. It tells you all kinds of things that you can use and resources, but one of them is the things if you disagree with the maps, it has information on how to file an appeal. So let's talk a little about some of the things that are going on there in Louisiana. So these are some of the active parishes that I have going in Louisiana right now. And so I mentioned that some of those actually have gone effective already. So Winn, Jackson, and Plaquemines have actually already gone effective. That means that they've already reached the end of that timeline. So if you are still disagreeing with the maps, you need to use that second opportunity. And there's also a viewer that's available to look at those maps, and that would be the National Flood Hazard Layer. It's the blue link. So the ones that are written in blue, and you will get a copy of this presentation, are in the blue link. Those other parishes that are in green, those have a green link at the end, and that is to the flood map changes viewer. So LaSalle Parish at the top, it has already been issued their preliminary map. The dates are there for all those preliminary maps if they're coming up still, but they've already got the preliminary map and they've already had that first CCO or community consultation officer meeting, but they're within about 90 days of getting that appeal and comment period being opened. So Lafourche, Terrebonne, East and West Louisiana, the PMR stands for physical map revision. That means just a portion of the parish is being updated. And then West Louisiana is a first time parish wide. So that's what the PW there's first time parish wide. So we have a lot of mapping going on. I hope that she'll take a look at the links later. And I'm going to turn it over to Bruce. We have a lot to talk about flood insurance right now. So if there's any questions, I'm going to let you go ahead and type them into the text into the chat window, and I'll go ahead and answer them that way and let Bruce get started.
Great. Thanks so much, Diane. Again, if you've got questions about mapping activity in the state of Louisiana or other places in Region 6, Diane is there. She can answer them. We also have from the NFIP State Coordinator's Office, Pamela Lightfoot as well, who's online, could answer some questions too. So we do have a lot to cover. And again, thank you to Louisiana Realtors for hosting this, as well as the other monthly workshops around flood insurance. We're going to specifically focus on this one into the effects of map changes on insurance. And so we're not going to get into details about flood insurance per se in a background, but there are a couple things I do want to highlight or refresh perhaps. And the first one is effective date. We all know about 30 days, or most of us do, that it takes, there's a waiting period of 30 days before the maps become effective. However, if a lender is involved, there is a 0 waiting day. It becomes effective the date of the close. But what a lot of people aren't aware of, that there is actually one more, and it's called a 1-day waiting period. So if you are newly identified to be at high risk, i.e. you went from a zone X, which is moderate low risk area, to zone A, which is high risk, and you don't have a loan, so there's not a trigger for that 0-day waiting period if the lender requires it, you will have only a 1-day waiting period. So let me state that again. So if you're newly identified to be at high risk and you don't have a loan and you want to get flood insurance, you don't have to wait 30 days. You only have to wait 1 day. And actually, that window of 1 day availability is 13 months long. I don't know why. I asked some of the, when I first got into the business, why that was that way. And some of the older timers, which I guess I now can classify myself as one being it for so long now, but those back then didn't understand or know why it was, but it's there. So 13 months. So let's talk about rate for a second, because it does apply to map changes. One set of rates is called the preferred risk rates, or preferred risk policy, and that's for properties that are in moderate to low risk areas, zone B, C, or X, that have had limited or no losses. And they can get these preferred rates. And basically what it's like auto insurance, if you will, from an understanding or kind of related to something that might be more familiar with. Let's say you and your spouse get married, if you're married, and you're young and you have no tickets or accidents, and you go to apply for auto rates and you get preferred or special rates because you have such a clean record and you're low risk drivers. And then as life has it, that you end up having kids, and the kids eventually turn 16. And usually when we do this in person, Diane and I see heads nodding up and down. They know about what I'm going to say is, yeah, the rates go up. Why? Because they know that 16-year-old or 17-year-old, that teenager, is going to come home and say, Mom, Dad, I was not going as fast as that radar gun says. And yes, I've had that conversation with my son. They're a higher risk. And so you suddenly see your insurance auto rates go up. Why? Because they know they're riskier and therefore you don't get preferred. Likewise, if you've had losses or you're no longer, or you aren't in a high risk area, in flood insurance, you get the standard rates. But what FEMA realizes that as opposed to auto, where you can control hopefully the car and not have the accidents and not speed, with changing in flood maps, you may do nothing, and yet now your house with an updated flood map is identified to be in a high risk area. So to minimize the financial impact, FEMA came up with a rating option called the newly mapped procedure, which gradually you start at the PRP rates and slowly go up over time till you get to a standard rate or a full risk rate. And Congress has a cap that it can't increase more than 18% a year. Right now, it's been 15% a year. And perhaps it may stop somewhere along the way up that staircase of 18% a year, because maybe using an elevation certificate might be easier. So, cheaper. So it might not have to go all the way up to the full risk rate that way. So newly mapped procedure is a way to help reduce that financial impact, and we'll talk about that in a minute. One other point I want to make about flood insurance is a term pre and a term post firm. Firm is flood insurance rate map, and pre means before. And so if your house was constructed before the first flood map in your parish or community, there was no NFIP building ordinance to say, hey, don't build there, or don't build near the water because you're going to flood. Or if you do, build higher up. So Congress said, well, we don't want to penalize these folks, so let's give them discounted rates or subsidized rates. Now, it's subsidized by other policyholders, not by the taxpayer. So people like me who have a preferred risk policy, we might be paying a couple extra bucks more than what we should. So those people in the pre-firm homes and businesses could have a cheaper rate. Well, Congress in 2012 and then 2014 said, hey, let's change that. Let's make this more full risk rated and make a stronger, financially stronger program. And so some of them are, those subsidized rates are going away, and we'll talk about that near the end of this quick workshop. If it was built on or after the first flood map, then it's known as post-firm, and there are building ordinances that your community or parish have to follow or have higher standards than that. So those rates are full risk rates. They're actuarial. And in most cases, an elevation certificate is needed right now to rate that. So I'm going to throw out something, Diana, and we don't have polling questions, but it'd be interesting just for interaction, see if people are paying attention and loosen up the fingers. If you could type in the chat, if Plaquemines, the answer to this question, and all you have to do is type in pre or post, don't type in the full word, be faster. So if Plaquemines Parish first firm was May 1st, 1985, and actually it was, and a house was built May 1st, 1984, is it pre or post firm? Pre or post firm? So let's see if you guys can type in the chat. Let's see what we're doing. I've seen a bunch of pre's. Yep. Okay, we got it. You guys are great. I'm seeing mostly pre's in the chat, and that is correct. The pre-firm is the correct answer. Pre meaning before, and 1984 is before 1985. This is an important concept because it will apply to some of the things we'll talk about under map changes, as well as some of the NFIP changes that have happened that sometimes get confused with map changes. Awesome. So let's move on and talk about those effects of map changes on insurance. In the next few minutes, I'm going to talk about four. First is newly identified to be at high risk. That means they've gone from like a zone X to a zone AE. Next is going to be those who are already at high risk, and now they're at even a higher risk. It's either the base flood elevation is increased or they moved from a zone A to a zone V. there are those cases, and it happens, I'd say almost on every map change, where they used to be in the floodplain and now the floodplain has shrunk because of better technology and information we have, and data shows that it's changed from what originally was or previously was mapped, and therefore they're no longer in the high risk area, but they are at risk. And that's something we want to emphasize so you can make sure to remind those folks. And then there are, in every map change, there's a lot of people who are never affected, but this is a good time we encourage floodplain managers and insurance agents to have that flood insurance conversation, because it's going to be top of mind. There are 3 rating options that are used right now around map changes. The first one is called the newly mapped procedure. Now, I like newly identified better. You'll hear me use that most of the time, and because the area around the building is newly identified, I've been in too many open house meetings where they come in to the gymnasium, the school or auditorium, whatever, to look up their flood risk. We're having a flood risk open house. And they look at how there has changed, and they find they're now in the floodplain, the special flood hazard area, and they go, you mapped me in there, you put me in there. Well, no, just all the data information we've received from the community, the parish, and what FEMA has, and new modeling shows that that area's risk is actually higher than what we thought before. So when it is newly identified to be at high risk, that's that newly mapped procedure I mentioned earlier, where you have 12 months in which to purchase that PRP. You have to be eligible for it. And then you start at that low risk rate and slowly go up. So when I finish this slide in this presentation, what Diane and I want you to walk away with is not necessarily in the mechanics of how all these options work, but to know that there are options. So the first option is newly mapped. That's going from X, moderate low risk, to high risk. But there are those that are at high risk and are going to even higher, where the base flood elevation was here. That's the elevation that the floodwater is going to come in, that 1% annual chance flood that's mapped to. And now the new maps say it's up here. Or they were in zone A and now they're in zone V, V velocity along the coastline. But it's important to understand there are 2 types of grandfather. The one we encourage insurance agents all the time to use is called continuous, which is get a policy in place before the maps change and continue coverage afterwards, continue to renew. Realtors, newly mapped procedure or grandfather and rating option can be transferred over to the new owner. So even if they don't have a loan and being required to have flood insurance, it's still a good idea to have coverage, 1, to financially protect yourself when, not if, it floods, but 2, it's a great selling point for that house. Let's say the maps become effective and they didn't get to grandfather. There's still another option called built-in compliance. And with built-in compliance, it's exactly as it sounds. They've built it in compliance with the map effective at the time of construction. But you'll see here, and again, the term pre and post firm. Post firm, those buildings constructed after or on or after the first flood map, it only applies to them. Why? Because if you listen to the statement, built-in compliance with the map in effect at the time of construction. Pre-firm, there was no map. So it only applies that if it was built after the first flood map, you can go back and show it was built in compliance and grandfather that way. The easiest one we tell insurance agents is get a policy now. The maps come out preliminary. You saw the listing of those right now that are, and get a policy in place and make sure it stays in place. Finally, as I mentioned, there are those cases where the maps, floodplains change, shrink perhaps, and policies or properties that were in the floodplain no longer in the floodplain. So the insurance agent can easily convert the high risk policy to a preferred risk policy and continue coverage. So let's look at these in detail. So the first one is you're in zone AE, you're in zone X, and now zone AE is identified in the new map that the house is in. So that kicks in the federal mandatory purchase requirement, which says if you have a loan through a federally regulated or insured lender, they're going to require you to carry flood insurance and show evidence of that. So the first thing people do is panic and say, oh my gosh, it's going to cost a lot of money because now I'm in a high risk area, and high risk means more costs. But in fact, as I mentioned now a couple of times, we have that newly mapped procedure which allows you to start at the lower cost preferred risk rates, have to purchase a policy within the first 12 months, and then slowly go up. Now, a couple of years ago, FEMA did change the rule and say, we'll give you an additional 12-month window for newly mapped procedure, but that 12-month window only applies if a lender comes and says, oh, we just found out you're in a high-risk area. We need you to get flood insurance. But we encourage, again, people don't wait. You don't know that the lender's going to come back. You may miss that window. So if right now the preliminary maps show you to be at high risk, buy it. Don't wait. Mother Nature's not going to wait to flood until the maps become effective. Some of the things you can say, some talking points. Hey, the building is newly identified to be in a high risk. Lenders are going to require it, but don't worry. FEMA has options to help reduce that financial impact. But in those high risk areas, you're more likely to experience a flood than a fire. So protect that investment. Purchase it, have an effect now. And a talking point I don't have, but should, is, and once you have that policy, it can transfer over at the time of a sale. So as a realtor, this could be an important selling point. Let's move on to the next one, just a quick second. Apologize for that. So here we have a case where the house is in zone AE, and when the new maps change, we find that the house is in high velocity zone right along the coast. And the federal mandatory purchase requirement kicks in, well, actually already is there because it already was in a high risk area. But people are thinking, oh my gosh, now the risk is even higher. So what do? Well, again, as I mentioned at the beginning, there's this grandfathering rating option, which you can lock in that lower risk zone for future rating. Again, pre-firm buildings, you got to have that coverage in place before the maps change. So we just say, get it now, don't wait. Likewise, if you're in zone A and you find the base flood elevation actually is increasing, the same things apply. People are concerned, but again, you can lock in that BFE for future rating instead of using this now higher one, which will result in a higher rate. Again, get it now, don't wait. And this rating option can be transferred over to the new owner. And so again, some things to say, people ask you about it. Well, yeah, your building's at a higher risk, even a higher risk now. But again, if you get a policy in place before the maps change, you can lock in that lower risk zone and or base flood elevation, save on flood insurance. But again, this rating option can be transferred over, so the cost savings can be transferred over to the new owner, and make sure to renew it, especially continuous coverage, and it's pre-firm. You don't want to let it lapse. There are cases, though, as I mentioned, where many times it's in a high risk zone. Good news, it's now in a moderate or low risk zone, zone X. And when that happens, the federal mandatory purchase requirement goes away. Now, the lender can always require it, but the federal mandatory purchase requirement goes away. But the key thing to remember is the risk doesn't go away. The risk is reduced, but it is not removed. 1 out of 4 claims in Louisiana occur in the moderate to low risk areas. We're seeing, what is it? In the past 5 years, 40% across the US of the flood claims are in the moderate to low risk areas. And those are people who had policies. That's from policyholders. Think about all the people that did not, like in Baton Rouge, unfortunately, 5 years ago now. And in Houston, just down the way off of I-10 there. So what we encourage is for insurance agents to take the high risk policy and convert it to a low risk policy, the preferred risk policy. And it's really easy for them to do. And what it does, it helps keep their home and contents protected, because contents is automatically included in a preferred risk policy. Just like your standard homeowners, about 40% of the building limit is what your content limit is. That's what it is for the preferred risk policy. Bottom line is there's still a risk, so stay insured. If the insured still insists on canceling, they're going to get a prorated refund of everything except FEMA has a federal policy fee. They don't get that. And there's a lot of paperwork they have to submit. And we encourage the insurance agents to have them sign a declination form, which says, I realize I'm still at risk and I still don't want flood insurance. It's easy for them to convert. And that allows you to take the high risk policy, take it back to its current effective date, rewrite it as a PRP. So let's say it was $1,500, the PRP is $500. They're going to get back $1,000. They're going to have no gap in coverage. There's no waiting period there. And the insurance agent gets to keep both commissions. And it's a win-win-win because the community wants them to continue to have a policy because that allows them to recover more quickly. Of course, the insured wins because when, not if they flood, they've got, and it doesn't have to, as you know, to be declared a federal disaster for flood insurance to pay. But if they require federal disaster assistance, it has to be declared, presidentially declared a disaster, and not all floods are. And the insurance agent, of course, wins because one, they've strengthened the customer loyalty and they've gotten the both commissions. And FEMA does because that's more people protected, and you and I, as a taxpayer, aren't paying out for disaster assistance. So strongly encourage it. And things to say include the biggest one of all is your risk is reduced, it's not removed, especially here in Louisiana. Louisiana is one big flood zone. It's just a level of risk that is different. Talk about, 1 out of 4 claims in Louisiana are from those high risk areas, probably eligible for a PRP, but not always. Louisiana does have a lot of claims, so the agent has to check on that. So convert the policy, get money back. No money is needed up front, no gap in coverage. It's a win-win-win. Think about it for you guys from a realtor's perspective is, and I'll give you some resources, knowing the maps are changing, and Diane showed you a chart of current ones, and I'll give you some resources on where to stay up to date on those. Knowing that that's going to happen is a selling point that, yeah, right now the house I'm trying to sell for my client is in a high risk area, but in 6 months it's going to be in a low risk area and the premium's going to go down. It could be a great selling point and be able to convert that policy. Or you looking to buy and you see it's in a high risk area, go to the preliminary flood maps and find out, yeah, but in a year or two, it's no longer going to be in a high risk area. And maybe another realtor wasn't as smart and didn't check that. And so that could become a selling point unbeknownst to them. But as mentioned, there's a lot of people who are not affected at all. And this is a great time that we encourage community officials and the insurance agents to have that flood insurance talk. If they have it, is it at replacement cost? As realtors, you probably know that the lender only requires typically the amount of the loan. So if the house is worth $200,000 and they have a loan for $100,000, they're not going to get replacement costs. They're going to get what's known as actual cash value, the depreciated cost. And so they're going to be very disappointed at the time of flood that they're not going to get as much money as they had hoped. And typically contents is not automatically included, I should say, like your homeowners. So therefore, they're like, well, how am I going to pay for, replacing all my clothes or all my furniture or all of my electronics, et cetera. So a good time to have that conversation, not necessarily you guys, but just making you aware of it. And if they don't have coverage, we encourage them to get a preferred risk policy. So we covered a lot in a short period of time. Takeaway slide here. If the risk is increasing, what we want you to know about is that there are money saving options. If they're going at a high risk and going higher, grandfather, lock in that lower risk zone, lower risk base flood elevation. But for a lot of folks, it means they're newly identified to be at high risk. They've gone from X to A. So there's the newly mapped procedure. But there are cases where the risk has decreased, not removed. And we have a way, FEMA does, of converting that high risk policy to a preferred risk policy, and they get a refund back. So those are the basic ones to understand. Of course, if there's no change, it's a good time for them to have a conversation with their insurance agent to make sure they have the coverage that they need. So good summary chart there for you guys as a takeaway. Basically, 3 questions that I typically get and insurance agents and floodplain managers get is when a map change is occurring, how am I affected? So they'll look up on the map, they'll go to, if we're having an open house, they'll go to the table and look up their flood risk. And then they'll say, oh my gosh, I'm in a high risk area. Okay, Bruce, I know you know. Tell me, how do I get out of this? Because it shows I'm going to be in a high risk area. Well, when we go over through the options, as Diane talked about, the appeal period, or maybe doing a letter amendment at the end of when the maps become effective, end of the mapping life cycle. Other than that, their question is, okay, so I'm going to be in it. So what's the cheapest cost? So what we ask for you as realtors is let them know the changes are happening, but also let them know there are options. And there are options that help reduce that financial impact, or if you're no longer going to be in the floodplain, hey, you're still in a flood zone and you're still at risk. So talk to your agent maybe about converting your policy, and then let the insurance agent get into those details. But there are options. A lot of people, as I say, think, oh gosh, I'm now in the floodplain, and it's not good news. Top three things, again, not to say is you don't live in a flood zone. We all live in a flood zone, especially Louisiana. It's the level of risk that's different. And we're seeing Mother Nature, again, like Baton Rouge 5 years ago. And you're seeing in the stories across the US, Mother Nature storms are being bigger and stronger than that 1% annual chance that's being mapped. Again, the maps aren't necessarily wrong, but the storms are being bigger than what Congress mandated FEMA to map. So if you don't want to say that, if we don't want you to say that, then also don't say, hey, you're mapped in or mapped out of a flood zone. Unfortunately, we hear the press say that a lot, but we want to try to minimize you all and all of our stakeholders saying that gets the wrong message out there. And finally, you don't need flood insurance. Too often we hear, oh, you're not in a flood zone, you don't need flood insurance. Tell them to talk to their agent, insurance agent. Tell them, walk through the options with them. And then the agent, what we tell them is walk through the options, get through the details. And if they still don't want it, don't say you don't need it. Have them sign that declination form. Have them make that decision on that. A couple things to consider on the coast. If you have a vacation home along the coast, whether it's over in Destin, Florida, or Galveston or somewhere, they do not get replacement cost. It has to be your principal residence to get replacement cost. And those pre-firm, again, remember why I went through that post and pre-firm little exercise. Pre-firm secondary homes rates increase 25% a year until they get to full risk rates. So they're on a steep rate increase mandated by Congress. I'll get into that in the next section here. But before I do, let me see what questions we have.
I've actually been answering most of them that have been coming
okay.
to me, so I think we're okay there.
Okay, great.
Thanks.
Well, thank you, Diane.
Sure.
Then let me move on and talk about those recent changes to the NFIP. Here we go. So with the NFIP, what we're seeing, I'll back up one, rates by the NFIP after all the reform legislation, the cap went from 10% to 15%. The maximum, though, for any specific rate can be 18%, so slightly higher than that 15. But there are certain buildings that are going up 25% a year until they reach full risk rate. And so these next slides will go into those. because again, it's important you as a realtor understand what might be driving the rate change. So pre-firm, again, built before the first flood map, zones in high risk zones, A or V, or that undetermined hazard D. Primary residents, those are ones that are lived in more than 50% of the time. They see a rate increase like everybody else, 15 to 18%, nothing different. But if it is a secondary residence, it will increase 25% a year until it hits full risk rate. That's a pretty steep increase. This has been going on since January 2013 when this was put in place. Again, Congress dictated this. Let me use the example of this house to the right. In the back is a lake, and an older couple is selling this, moving into assisted living, sits in zone A, sits right by the lake, but it's beautiful. A younger couple comes along and buys it as their secondary house, as a vacation home, and they're considering maybe they'll rent it as well. The insurance premium jumped when the young couple bought it, and they thought, okay, maybe there was a map change, something happened, why? The reason it jumped was because it was being rated as a primary residence, which was going up. Actually, it was around, the average has been around 10% a year, primary resident. And now the new couple is using it as a secondary home. And because it's pre-firm, it's not been at actuarial rates, and Congress wants these secondary homes to get to actuarial rates. And the reason for the jump wasn't due to a map change, but was due to a change of how it's going to be used. So as a realtor, you need to make sure you understand the use of a building, if it's in an older home in a high risk area, will affect its rate. Doesn't deal with map changes, but we wanted to highlight that point. The same thing applies of a 25% annual increase for commercial structures. Basically, Congress says if you can afford to have a secondary home, if you're a business, you could probably write off the insurance costs. We want those to get up to full risk rate. Also, repetitively flooded buildings, substantially damaged too. So the two to think about, 25% a year until full risk, and it's the insurance agent who has to determine that. You got to get an elevation certificate to rate it to see when it gets to full risk rate and gets off the 25%, and then finally gets the normal increases. Secondary homes, commercial. Other things to know about, just FYI, they put in the reserve fund assessment. Congress said, you're an insurer, act like an insurance company, put together a reserve fund just like insurance companies do to pay future claims. So they did. It was at 15, now it's at 18% premium. So you may see that on the declaration page and wonder. Also, Congress put on the Homeowners Flood Insurance Affordability Act surcharge, and basically all policies, pre-firm, post-firm, preferred risk policy, Zone V, Zone A, Zone X, all are getting a $250 surcharge every year on the policy, except primary residences get 25. So keep that in mind, that if it's not a primary residence and they're using it as a secondary home, they're going to get hit with a $250 surcharge, not a 25. The good news is all this money that's being used, taken through the surcharge, is being used for future claims in the reserve fund assessment. But I wanted to again highlight the use of the building, primary versus secondary, could affect the final premium cost. Other things to make you aware of changes, this goes back a little ways, but some people may not be aware of, is the federal mandatory purchase requirement trigger changed in 2015 that said, if your house is slightly up the hill and out of the floodplain, zone X, and you have a garage that slopes downhill and it's in zone A, that used to trigger the mandatory purchase requirement. Now, going back 6 years ago or so, now it says, even if this is in zone A, it doesn't trigger the mandatory purchase requirement. And I've seen and heard of cases where that is now applying and working to the benefit. And what means is insurance is cheap because it's being rated as Zone X, which means it qualifies for preferred risk policy. So again, if the detached garage is in a Zone A and the house itself is in Zone X, the mandatory purchase requirement does not apply. They used to have a rule that said if you have flood insurance and any other fees and whatever else, taxes or whatever, you have to escrow. If you're escrowing those, you have to escrow the flood insurance. Then in January 2016, it said, hey, we don't care whether you're escrowing things or not. If you're requiring flood insurance, you got to escrow the flood insurance. So that was a new rule. And finally, just a couple of years ago, and I'll hit upon this again in a minute, the lending regulators released guidance telling lenders how they can accept private flood policies. FHA is going through the comment period right now for theirs. Other recent changes just to be aware of, again, lapse policies. Remember I talked about pre-firm? If a pre-firm policy lapses, i.e. it doesn't get renewed, or that newly mapped procedure rating that we just talked about, and they forget to renew it more than 90 days, or they do it twice more than 30 days, it has to be re-rated as a post-firm building using the current maps. That could be a costly mistake. So if you have a policy, you're talking to any friends, make sure the bottom line is make sure they renew their policy. Other recent changes, I'm not going to get all of them because they don't all apply to you. You can have two primary residences, which is great because think about what I just said about surcharges and cost for pre-firm and the FIA surcharge on primary residences versus secondary. For example, if you there's a couple that has a house in Lafayette, Louisiana, where I lived for a couple of years, and they have a vacation home in Destin. And the wife really likes spending a lot of time in Destin, more than 6 months a year, but husband likes living in Lafayette more than 6 months of the year, and their marriage seems to work great. That counts as two primary residences, and that's an important cost savings. So again, find out the use of the building. Newly mapped procedure eligibility, as I mentioned earlier, is extended. We used to have a 12-month window. We have an additional 12-month window if the lender comes back and says, oops, we forgot. We just saw that it's new in a high-risk area. We need flood insurance in place. 2 to 4 family buildings, there can be a primary residence. How? Because one of the 2 to 4 is the owner. So again, a cost savings there. People say the rate increases are going really high. Just to show you, they have picked up through 220 up to 10%. The April manual just came out, and it too is right around that 10% amount. Interesting, the V zones didn't really increase this in 2021, but as you can see, the rate increases post-firm, because they're pretty actuarial, are low. Pre-firm are higher, and of course you have that mandatory 25% increase. But where we're seeing a lot of losses, as mentioned, are in the moderate to low risk area. That preferred risk policy rate is going up the most, 15%. Why? Because those losses are happening, those bigger storms are happening. And that's why we encourage people, just because you're in Zone X doesn't mean you're not going to flood. Let me talk about private flood insurance, since I just mentioned it real quickly. What we find is there's about 50 to 60 programs out there. That's not agents, that's different programs that are out there. They're written on two types of paper, if you will. One is called admitted, which means the insurer has to submit the rates and has to submit the policy forms to the Department of Insurance for approval. And any subsequent rate increases or changes to the forms have to be approved. By doing so, those carriers that are unadmitted have access to the state guarantee fund, which says if the insurance company goes belly up and can't pay claims, the claims will be paid out of this state guarantee fund. So the policyholder or claimant will be made whole. But unfortunately, catastrophe type coverages, as well as other unique type coverages, are written through non-admitted carriers, and they do not have access to that state guarantee fund. But they don't have to file their forms. They don't have to file their rates. And especially for catastrophe coverage, that allows them to be more nimble to make changes, especially around, like think about auto. We have so much information about auto claims. Homeowners, we have so much information about homeowners and who's at a higher risk and who's not. But the world of flood and earthquake and others, we don't have as much data, though we've really improved over the recent years, unfortunately, but we've gotten a lot more data. So people or companies like Lloyd's go the non-admitted route, but that is that exposure. But what's really driven private flood explosion, if you will, in the past 5 years is new technology. New technology, artificial intelligence, ways to identify what your flood risk is based upon what's already out there on the internet, whether it's through Google Maps or doing ortho photos, whatever. People know a lot about your property, and they're using it in homeowners as well as in private flood. The other thing that has helped driven is the thing called lender compliance, where, as you heard me mention back in July 2019, the lending regulators came up with guidance to tell the lenders, hey, this is how you can, and you actually must accept private flood insurance. And so that has made it easier to sell the properties because there's not a reluctance of the lender to say, I don't know if I want to accept that private flood policy. But really what's changed it, besides being price competitive in certain areas, is providing broader coverage, much broader coverage. And what are those broader coverages? Well, basically what we're seeing things like higher limits. Limits instead of the $250,000 that building currently has with the NFIP, we're seeing $5 million. And instead of $100,000 for contents for the NFIP, we're seeing $2.5 million in contents. And that TIV, total insured value, is where you can combine both contents and building. And so the total limit they'll pay out is $15 million or $20 million. So the limits represent more the type of housing that's out there today. They're also offering replacement costs both on building and contents. With the NFIP, only principal residents insured to 80% of the value or higher will get replacement cost for a condominium association building. Otherwise, replacement cost is not available. And the actual cash value depreciate cost is everything else, including contents, not in private flood. With the NFIP, you can't say, I don't want the coverage anymore. I don't think it's going to rain. I really don't think I'm at risk, whatever it might be. Well, the concern FEMA has is that people get a policy like in Louisiana. They'll get it in May and drop at the end of November when hurricane season starts and begins. The hurricane season seems to get wider and longer. But I found in the private flood world, you can cancel that way. And the insurers that I've talked to, and I haven't talked to all 50 or 60, are not finding the seasonality. They're not finding people dropping it because of that. John Clancy, you have your mic on. Muted, that'd be great. Okay, we also have waiting period. Right now, as you heard me start this all off, a 30-day waiting period, but on average, we're seeing about 0 to 5 days as the typical ones being used, maybe up to a week, but usually right at 0 or 5 days is the waiting period. And finally, additional coverages. We're seeing additional living expense, where right now with the NFIP, let me back up, right now with your homeowners, if you have a fire and you have to live at a hotel, at Airbnb, at a partner, whatever it might be for a while till it all gets repaired and you move back in, typically your homeowners provides you this additional living expense. But with the NFIP, you don't have ALE. You have to get additional, go to individual assistance and hopefully get some money from them to cover some of those costs. Well, with private flood, we're seeing a lot of carriers offering that as an endorsement that you can get. We're seeing, we don't have basements in Louisiana, but we're seeing expanded coverage in basements, which is really important in areas in the Midwest and the Northeast, where a lot of activity is done in the basement, in their man cave down there. Flex cash, we're seeing where companies are offering, here's $10,000. Go use it as you want. If you need to stay somewhere else, if you need to clean the yard, which is not covered by a policy, if you need, whatever, here's $10,000 to get you going, help you recover. We're seeing swimming pool cleanouts. So a lot of creative additional coverage to make it broader. So not only is it broader, offering higher limits, often competitive, they're providing quick quotes. They're making it easy for somebody to go in, and these are 2 online ones that I did. They're in Florida, Miami. It's my mother-in-law's house. I don't have her NFIP policy, unfortunately. But knowing her address, and that's all I knew, I went in and got 2 quotes like that. Fast, quick, a couple $100 difference there. So really, this private flood is making it a lot easier. And FEMA is not against private flood. If somebody has a flood policy, federal or private, FEMA wants that, because that's one more person who is financially protected that you and I, the taxpayer, will not have to pay out disaster assistance for. But things to consider about the private marketplace. If you have an NFIP policy, you go to the private and then you come back. That actually counts as a lapse. You might come back because it got too expensive or they stopped writing it. You'll have to be written post-firm. If you were pre-firm, you'll be written using the new map, even though you might have had newly mapped or grandfathering. You're going to lose those opportunities. And because you're coming back and it's the NFIP, they have a mandatory 30-day waiting period. And if you were written through an admitted carrier, like a non-admitted carrier, like a Lloyd's or somebody like that, then you do not have access to the state guarantee fund. So a couple things to think about when someone happens to be talking to you about, oh, maybe I want to get a private flood policy. Absolutely can be more competitive sometimes, faster, easier to quote, but think of some of the limitations. So where is FEMA in all this? Well, FEMA has been working on the past 5 years, a whole new rating system that they want to make the rates more equitable, that they actually represent the risk for a specific building and not just a zone. If you think about it, the room you're in, let's say, is zone A, and over by the door out is over where zone X is, and over by the window is zone A. No matter where you're in the room, whether you're close to that zone X or close to the river, if you will, the window, you're going to be rated the same. Equity in action, risk rating 2.0 says no. Depending where you are, how high you are, what your replacement cost is, et cetera, your risk is different perhaps than your neighbors or somewhere down the street. And we want to make it easier. So they want to enhance the policyholder experience, make it less complex for the agent, make it easier for the policyholder to understand what those rates are, and make the rates risk-based for the individual home using today's actuarial practices, not back 40 plus years ago when this current rating system was designed. So in the new risk rating 2.0, it's going to have things like pluvial as a flooding event. That's just normal rainfall. Again, I keep bringing up Baton Rouge 2016. That type of flooding event is not in the current risk rating. I'll call it 1.0 rating. It's going to be based on the actual building replacement costs. Right now, your lower value buildings are actually picking up more, or being paid, are being charged higher premiums than they probably should be compared to the more expensive and larger homes. How far you are from a flooding source. The elevation certificate is going away. Yes, if you have it, it may help, but no longer is it going to need it. It's based on the first floor elevation above the ground. And they're going to use a lot more technology, a lot more modeling and information from NOAA, a U.S. Geological Survey, the U.S. Army Corps of Engineers around levees. They have 3 catastrophe models that they are using. Replacement cost data, elevation data, all of that being put in together, all of that being done behind the scenes so the agent can quote much more quickly. And if the homeowner has done any mitigation, whether it's in a high risk or low risk, they're going to get credit for elevating the machinery, for putting in flood vents, for elevating the home, and for commercial flood proofing. All of this starts October 1st this year for new business. All renewals will start being rated using risk rating 2.0 April 1st of next year. However, FEMA is saying that if a renewal occurs between that October and April, and it's actually cheaper using risk rating 2.0, they're going to give them that lower premium. That's about all the information so far FEMA has released. So stay up to date. I've given you the website there. Great web page. They are constantly updating. I understand there's going to be actually some more data there. There's a nice 6-pager that describes about risk rating 2.0 with some good FAQs at the end of it. And then they have state pages like this one here. And I will tell you what I heard should be released maybe today or later this week is actually down to, I believe, the parish or zip code level of this information, so we can see more closely where those changes are happening. But let me highlight something here, if you can see it on your screen. If you look, 90%, if you take the green bar, the 20%, those are people who are going to see a decrease. In the light blue, 70%, those are people who are going to see an increase similar to what they're getting right now. Right now, it's about $8 a month. This is anywhere from 0 to 10. So 90% of policyholders in Louisiana are going to get either a decrease or essentially no more than the same increase that they've been getting in the past. There is a small window of people who are going to get a moderate and ones, even smaller window that are going to get higher one. According to FEMA, those that are getting the most significant increases are your more expensive, higher valued homes that have just been not rated their full risk. The other thing is, look at the chart above that. This is a great thing to understand and communicate flood risk in Louisiana and why flood insurance is important. The average claim in the past 10 years is about $56,000. The average individual assistance for those people who didn't have flood insurance is $7,000. That's 9 times more payout with a flood policy than relying on the federal government to bail you out. So have a policy, and you don't have to wait for a federal disaster. That's $7,000. You have to wait for a federal disaster. So some really good talking points there. Diane, I'm going to hold off on questions and just get through these resources quickly, and then we can take whatever's up there. You got to have this bookmark somewhere. The Map Service Center. This provides the current maps, preliminary flood maps. Agents use it to get historic maps, and it allows you to get the fermets. You have the ability to go in and search for products. Let's say Louisiana, I highlight here LaSalle Parish. They've got preliminary maps, as Diane pointed out. They've got effective maps, and you can even go back in historic. Diane mentioned that National Flood Hazard Layer. This is for those that are effective and you want to find out your flood risk. You can go in and get a fermet. And the beauty of these fermets, where we have the digital data, is they're not the old gray blobs, but actually have the orthophoto so you can actually see the house. I drew the red circle around it, but you're able to put a pin in or put an address in and use this to help explain to your client, here's the flood zone that your house is in right now. Or if you're looking to buy, you can point it out to your client to say, hey, this is the house you're interested in. If there's a map change going on, like at LaSalle and others, you use the map changes viewer, which does the same thing. You go in, you put a marker on the building or the address, and it gives you a report, and it shows on the right-hand side in the preliminary map, hey, it's right next to zone A, but it's showing in the prelim you're going to be in a zone X. That's important in making a decision of whether you're buying or selling that house. In this case, and I picked this comparison because you notice it doesn't give you the same data on the left. That's because there wasn't a digital map. So where you have a digital map, it'll show you the flood zone on the current effective map, and then the preliminary map, and it's kind of like showing you the comparison or changes on that. Great tool for especially figuring out what's happening to my property I'm interested in buying or selling. Map change request, here's if you want to learn more about LOMAs, we've got a website for there. You want to learn more about the risk map process, we have a section for real estate, of course, lending insurance that helps explain the risk map process for you that Diane talked about at the beginning. If you want to learn more about flood insurance, we've got the consumer website. This is a great informational. Put it on your, if you have a realtor firm webpage, put this up there. It's great information, basics about flood insurance written so the consumer property owner can easily understand it. If for some reason you really want to learn more about map changes, on the agent's website, they have a link there which goes through exactly what I did earlier about low to high to higher, and high to low scenarios. But while you're there, the cost of flooding tool, I think, is a fun tool, but also very informational, where you can move a marker up and down to how many inches of water will be in different size homes from 1,000 to 2,500 to 5,000 square feet, how much flood damage that's going to cost. Here, 6 inches, over $50,000 in damage. A great reason to have conversation around why you need flood insurance. Where are you going to get that money? Your retirement fund, from your college fund for the kids, or get flood insurance. There's some great resources for realtors. I have embedded the links. FEMA updated their website, and now their links are really long. So in some places, we've been able to get short government URLs, but haven't yet on these two. So that's there. If property owners want some more information, again, we're not looking for you to be insurance specialists, but we do have a couple brochures around the map changes, preferred risk policy, and they always, well, what's covered? Well, there's a great, easy to read summary of coverages. And finally, I'm going to use something actually from the National Association of Realtors about talking about flood insurance and why it's important, and about a court case that was generated around someone who did not. So please have at least a conversation about the flood risk, and know whether it's in a high risk area or a low risk area, but we're all in a flood zone. With that, I'll finish up. We've got a few minutes, I believe, left. You've got contacts of Gil Gilron. He has been doing a video series. I think one was just posted with him talking about map changes. He is the man on insurance specialist for Region 6. Diane, you had there, and of course, Pamela is on right now if you have any questions related to what's going on in the state of Louisiana. We've put together a resource guide you see on the right that will be sent out to you if it hasn't already, along with a copy of this presentation. And with that, Diane, as I say, I think we got a couple of minutes left. Any questions?
I was just going to highlight a couple of things. I think they're actually already answered, but I want to just make a couple of points. There's a question about, you didn't mention Zone C, and I wrote in the text, but just in case you might miss that part, that Zone C is Zone X that you kept talking about, but that's on an older map. So if you see that on the presentation later, that's just considered, if you've got a map that says Zone C on it, you can kind of just replace that in your mind, right, Bruce?
Correct. Thank you.
Yeah. And then somebody asked a question about were we going to talk about grandfathering, and we only had just one quick slide on it. This is a skinny down version of what we normally would do. It's a longer presentation normally, so we couldn't put a lot in there, but I did put the link. It's in this resource guide that Bruce is showing here. That guide is also in your chat right now, but I put the direct link to, there's a really good fact sheet in there on grandfathering, and I put the link directly in there also. So if you have questions about grandfathering, I hope that you will at least look through that. It's on, I think, that second section there, flood maps and the insurance options. And then the last one was asking about EC certificates. Were we going to talk about that? And that's another one of those topics that there just isn't enough time today, but I'll take that back to the region. Usually, I believe it's the FMI branch that usually talks on elevation certificates. So I'll take that back to the region and let them know that some of the members are actually interested in that also. So that's also something we kind of cover a little bit with the base level engineering part of our portion of this presentation. But thank you for asking those questions. There is another question here. Let's see. Are the maps on the Map Service Center flood maps? Yes, they are flood maps that are showing on the FEMA's Flood Map Service Center. And then there was another question about the 30-day waiting period. Could you go over that again, Bruce, real quick?
Yeah. So the 30-day waiting period, I was going to, oops, clicked on. It's going to go back to, so all of these things with the FEMA Map Service Center that we went through here are all the things that are available on the FEMA Map Service Center. So the current flood maps through the National Flood Hazard Layer, the preliminary flood maps you can access, plus do that changes viewer that shows you the report. So that's why I say down at the bottom link there, that's a great link. And you're going to get this PowerPoint. So the 30-day waiting period is basically standard. If there is not a lender involved saying, hey, Bruce, you have to have flood insurance and requesting it, and there's not a map change involved. Otherwise, there's a 30-day waiting period. So if you called up your insurance agent and said, hey, I saw Bruce and Diane's workshop today, I really like to get flood insurance. If there's no lender requiring it, you're going to have to wait 30 days for it to become effective. So you write the check tomorrow, 30 days from the date of that check is when it will become effective. And so if you see a storm coming, and this is a problem people have sometimes, they see the storm coming, or in the days when it used to be 5-day waiting period, and they saw the Mississippi River back in the early 90s breaching along the way down, they would try to guess, okay, am I going to need it or not? If a flooding event is going on during that 30 days, it is not covered. And that's why we strongly encourage agents to really promote flood insurance before hurricane season, actually all the time, but heavier push, because once hurricane season starts, if a hurricane's out there, it'll probably be coming ashore if it's headed your way more than quicker than 30 days. So hopefully that explains it. Back to the grandfathering real quickly. Grandfathering was one where it deals with if the zone increases or in risk going from an A to a V, or the base flood elevation increases, you can lock in that lower base flood elevation or that lower risk zone for future rating. And that policy and rating option can be transferred to a new owner. Go ahead.
And I did see that they're asking on the multi-listserv if those are FEMA maps. I don't know what maps are showing on the multi-listserv. So I don't know if you're familiar with those or not, Bruce.
No, I don't. And I will tell you the official rule or official maps are ones that are on FEMA map centers. So if they are linking to that, then the answer would be yes. But I don't know if Angela or if you guys know. Okay.
That isn't anything that I can answer.
Okay.
Yep. And that looks like all of them. So I mentioned that there was a elevation certificate basics course back in March, and that they have the link that they've shared there. So, so that one has been presented and they have the link to it. So thank you all very much.
And there's a great, FEMA just recently put together a whole, it's probably too much detail, whole video series on elevation certificates that you could Google on YouTube that just came out not too long ago. It's very useful as well. Do we have any other questions?
That's the last one I see. And I think we're right at the top of the hour too.
Well, I want to thank again on behalf of Diane and I for Louisiana Realtors hosting this. I know we covered a lot in a short period of time. As Diane mentioned, usually it's 2 hours. So we're glad and excited to at least get 1 hour, and you'll be getting a copy of this presentation in that resource